Hello friends, welcome to learning sessions, and today in this video we are going to discuss about the very important chapter from the module A of Rbwm, that is retail banking and the wealth management, and it's related to branch profitability. And if you have not gone through the previous videos, kindly do find the videos on our YouTube channel. Do subscribe right now and press the bell notification icon so that you get updated whensoever we upload the new videos. The full course is available where we will be covering the full course videos, chapter wise professor questions, mock test, mega mock test, and each and everything. And if you want to get the access to free PDFs of all the 4 papers of Jaiib, simply do sign up on our website jaiib.learningsessions.in, and for the after sign up, do navigate to the PDF section and you'll be finding each and every PDF of all the 4 papers of Jaiib over there. So let's start the session over here, and it's related to the branch profitability. So if we talk about the banks in India, those are actually regulated either under the Banking Regulation Act 1949 or under the RBI Act, that is particularly given by the Reserve Bank of India, right? So banks are actually regulated under these two. And further, the Banking Regulation Act was passed as the Banking Companies Act. So previously it was the Banking Companies Act in 1949 when it came into force on 16th of March 1949, and thereafter it was changed to Banking Regulation Act 1949. So previously it was named Banking Companies Act, but now it is Banking Regulation Act 1949. Okay. And further, if we talk about the development of the banking sector in India, there were actually 3 phases related to it. So development of banking in India is basically under 3 phases. Under phase 1, it's related to the early phase, that is ranging from 1770 to 1969. So first of all, it's related to emergence of the bank. So Bank of Hindustan was actually established in 1770 in India. So it was actually the beginning of the Indian financial system, formal Indian financial system. And after that, there was actually establishment of presidency banks. So the 3 presidency banks were established. In 1806, Bank of Kolkata was established that as the first presidency, and Bank of Bombay in 1840 as the second presidency, and in 1843 the third presidency, that is Bank of Madras, was established. So 3 presidencies were established. The Bank of Hindustan was established in 1970, Bank of Calcutta in 1806, and further Bank of Bombay 1840, and Bank of Madras in 1843. And after that, all these 3 presidency banks were merged together so as to form Imperial Bank of India in 1921, which basically later on became State Bank of India on 1st July 1955, and it became the first public sector bank in 1955 when its name was changed to State Bank of India, right? So second phase, particularly ranging the year from 1969 to 1991. So the first period is ranging from 1770 to 1969, and the second phase is ranging from 1969 to 1991. Now in 1969, there was nationalization of the bank, and the government actually decided so as to nationalize the banks under the Banking Regulation Act of 1949, during which 14 banks were nationalized. And also, so in 1969, 14 banks were nationalized, and in 1980 another 6 banks were nationalized, and further total 20 banks were nationalized in this particular period, right? And further, the phase 3 is actually the liberalization of the banking or the particular banking sector reforms. Now there were economic reforms there in 1991 that basically led to the liberalization of the banking sector, and particularly banking sector reforms were there. And let me tell you that the government set up the Nasimam committee so that whatsoever the major reforms are to be there in the banking sectors, those could be managed. And particularly during this period, Reserve Bank of India gave the licenses to the private sector. So private sector banks were established in India, and also as per the recommendations of the Nasimam committee, the banking sector actually introduced various kind of things, like particularly the banks were open to the foreign players, there was deregulation of the interest rate, and further there was introduction to CRR and particularly SLR over there. Not introduction, actually there was reduction of the same. Previously CRR and SLR were quite high, but now the CRR and SLR were to be reduced in a phased manner. Okay, now let's consider the profitability. Okay, so profitability is the ability of a company. Let's say the case that ABC company is there and we say that the company is actually generating a profit. So particularly when we are talking about the profit, we are generally talking about that these are the numbers that we have generated, right? But when we are talking about the profitability, we are talking about the ability of the company so as to generate the profit relative to its resources. Let's say case this particular amount of investment has been done or sales have been made. Now this profitability has been done. That's actually, so profitability is a concept related to ability of the company. So it basically measures the efficiency. So when we are talking about the profitability, we're talking about the efficiency and effectiveness of the company over there, that how effectively, how efficiently the bank has been particularly utilizing the resources so as to generate the profits. So profitability is usually expressed as a percentage or it is expressed as ratio. Kindly please note it down. It is usually expressed as a percentage or the ratio over there. It basically gives the insights related to the financial performance of the company, viability of the company. So profitability tells us the ability of the company so as to generate the profits. Now it's related to profit. Now what is actually profit? The financial gain or excess over the revenue, or of the revenue above the expenses that the company has actually made. Let's take the case that the company has made expenses of rupees 10 and particularly the revenues have been generated of rupees 30. Now what will be the profit? The excess of amount, that is 20 rupees, is the profit which has been generated over there. So it basically, the profit represents what? The profit represents actual monetary amount that is left after deducting all the expenses, all the cost, all the taxes, interest from the revenue part. Okay, so whatsoever the total revenue was, let's say total revenue is 30 and whatsoever the total expenses, interest, taxes, etc. were 10, so the profit would be 20 over here, right? That's actually related to the profit. Then further it's related to gross profit. What do you mean by gross profit? So when we basically say that our net sales are net sales minus the cost of goods sold, that's the direct cost of particularly producing those goods, right? And when we particularly subtract the COGS, that is the cost of goods sold, from the net sales, we get the gross profit. Now gross profit is actually what? What is gross profit? It is net sales minus the COGS. And what do you mean by net sales? It may be the case that we have made the gross sales and further there were sales return. So what will be net sales? That will be gross sales minus the returns, right? That will be the net sales over there, right? And profit can be divided into three parts. We are having the gross profit, we are having the operating profit, we are having the net profit over here, right? So first of all, we are talking about the gross profit. So it is net sales minus the COGS, and particularly it indicates the company's core operations profitability. The gross profit indicates what? It indicates the profitability of the companies from the core operations without considering the other operating expenses. So we are not considering the other operating expenses and we are just considering the core operations over there, right? And further it basically helps us to assess that how efficiently the company produces and particularly selling its core products and services over there. Okay, and now let's have a look at the question over here. It says, from the following information, calculate the gross profit. The gross profit ratio is to be calculated, and for the cash sales are given to be amounting of rupees 5 lakh. So cash sales are amounting 5 lakh over here, and further the credit sales are given to be amounting rupees 4 lakh over here. Sales return are amounting 1 lakh rupees. So what will be our net sales? Net sale is equal to 9 minus 1, that is equal to 8 lakh is the net sales over here. And particularly we are provided with the cost of goods sold is given to be 5,50,000. So our gross profit or GP would be equal to what? The GP would be equal to the 8 lakh, that is actually equal to the net sales minus the COGS, that is 5.5. So it is 2.5 lakh. So gross profit is of 2.5 lakhs over there. And if we talk about the gross profit ratio, in that scenario it will be equal to gross profit divided by the net sales. So gross profit divided by net sales, that is equal to 8. So it will be 2.5 divided by 8, and whatsoever the number it will be the gross profit ratio. It is represented as percentage, right? And after that it's related to operating profit. Now we basically are going to talk about the profit generated by the company from its core business operations. Now in the case of gross profit also, we are talking about the core operations. We were talking about the core operations in the case of gross profit also, and also in the scenario of the operating profits, we are going to talk about the core business operations over there. But over here, when we are calculating the operating profit, we have to subtract the operating expenses. Now whatsoever the operating expenses were there, let's take the case that the building rent was paid, wages were paid to the direct laborers, etc. Right, raw material, particularly research and development cost, which is actually directly related, related to the production sector over there, or directly related to the operations of the production sector over there. That's the operating expenses, right? So operating profit would be equal to gross profit minus the operating expenses. That is actually the funda related to it. Now let's have a look at the question over here. It says, from the following information, calculate operating profit and operating profit ratio. Revenue from operation is given to be what? Revenue from operation is given to be 8 lakh over here, and we are provided with the cost of revenues is given to be 6 lakh over there. The cost of revenue is given to be 6 lakh over there, and for the operating expenses are given to be 75,000. It is given to be 75,000. So when we are talking about when we are actually talking about revenue from operation, it is actually related to the total revenue we were having, and further the cost of revenue is actually 6 lakh over there. That is already given. तो आपके पास यहाँ पर जो ऑपरेटिंग प्रॉफिट रहेगा, डेट विल बी इक्वल टू 8 लाख माइनस 6 लाख माइनस 0.7 lakhs ओवर देयर, यानी कि 1.25 lakh रुपीज का रहेगा. That is actually the operating profit that we have calculated over there. This is operating profit so far, right? And the next also we are to calculate the operating profit ratio. Now so as to calculate the operating profit ratio, you must be knowing the net sales, which is not given over here. The net sales amount is not given over here. So answer क्या लिखेंगे यहाँ पर? What will be the answer? The answer will be cannot be determined. हम इसको determine नहीं कर सकते हैं, बिकॉज हमें डाटा फुल फ्लैश नहीं दिया गया. अदरवाइज अगर हमें दिया होता कि नेट सेल्स आर गिवन ओवर देयर, तो आसानी से वहां पर लिख देते, राइट. फर्दर उसके बाद बात आती है नेट प्रॉफिट के बारे में. सो व्हेन वी आर एक्चुअली टॉकिंग अबाउट द नेट प्रॉफिट, वी आर नॉट ओनली सब्ट्रैक्टिंग द ऑपरेटिंग एक्सपेंसेस, लेकिन अगर आपके कोई नॉन ऑपरेटिंग एक्सपेंसेस भी हैं, आप उनको भी सब्ट्रैक्ट कर देते हो. यानी कि मेरे पास जो भी टोटल रेवेन्यू पार्ट था, whatsoever the total revenue part was there, and further I am to subtract the total expenses out of the same. And that will be what? That will be your net profit. So net profit will be equal to total revenue minus the total expenses. So whatsoever the expenses, whether those were operating expenses or the non-operating expenses means which are not directly related to your particular operations but otherwise imposed on you, like let's say depreciation cost, or particularly let's say the interest cost over there, or particularly let's say taxes over there, those are all to be subtracted so as to calculate the net profit, right? So we are provided with the question over here. It says, from the following information, calculate the net profit and the net profit ratio. So we are provided with the revenue from the operations, that is given to be 8 lakhs over there, and particularly the revenue, cost of revenue from the operations is 6 lakh over there. Indirect expenses is particularly given to be the rupees 75,000 over here, and non-operating income is given to be 3 lakh over here. Non-operating income is also given, right? So accordingly we are to calculate the net profit and net profit ratio. So accordingly formula लगाते हैं. So total income, whatsoever the total income was here, what was our total income? The total revenue is 8 lakh, that is from the operations, and non-operating is particularly income is 3 lakh. So our total revenue is 11 lakh. And whatever our total expenses, the cost of revenue 6 lakh, and for the 75,000 related to indirect expenses, so it will be 4.25 lakh. That is what? That is your net profit. What we have calculated? We have calculated the net profit over here, that came out to be 4.25 lakh. And again, if we are to calculate the net profit ratio, that is the NP ratio. Now whatsoever the net profit divided by the sales, that will be the answer. Now we are not basically known about the sales over here, so what will be the answer? The answer would be related to, answer will be what? Answer will be cannot be determined, right? Further, now let's move and further let's discuss the differences between the profit and the profitability. Now, what do you mean by profit? Now, profit is particularly a figure related to that whatsoever the surplus we are having after deducting all the expenses. That is basically indicating what? That is indicating the profit, right? And when we are talking about the profitability, it's the ability of the ability of the company so as to generate the profits from the whatsoever the resources which are available with us right now. That's actually related to the definition of the profit and profitability. Now, after that, focus. If we talk about the focus, actual amount of money earned by the company. The focus of profit is whatsoever the actual amount which is earned by the company, that is a profit. And when we're talking about the profitability, it's the effectiveness and the efficiency of the company so as to generate the profits, or whatsoever the strategy the company will be following, right? And further we talk about the calculation. When we subtract the total expenses from the total revenues, we can be calculating the profit. And how profitability can be calculated? It can be calculated by way of return on investment, or return on assets, or return on equity. So we can be going for the different things, and for the profitability is either indicated in percentage or as a decimal part over there, or as a ratio, right? And further we can be calculating the profitability from ROE, that is return on equity, return on assets, or return on investment, right? And if we look for time frame, the particular profit is calculated for some particular time frame. Let's say for one month, 1 quarter, 1 year, it may be, right? And further, if we talk about the profitability is basically also looked for the different terms. We can also be looking for the profitability over the different time frames over there so as to check that what is the trend. Let's say case previous profitability was 18% and now the profitability is 22%. We can check the trend, and further it also allows us that we can be comparing, right? And further, when we're talking about the profit, it's an absolute value. It never considers the size of the company, because we are not considering that what particular resources were used so as to generate this profit in case of profit over there. But in case of profitability, we do consider the size of company, we do consider the type of instruments, we do consider how much revenue was there, we do consider the different type of costs over there. That's actually related to profitability and profit. And further we look for the importance of the same. We can actually be assessing the financial performance of the company. We can look for the financial performance of the company, and further we can attract the investors based upon that. And if we look for the profitability, we can evaluate a company's long-term viability. We can check the competitiveness of the company. We can check for that how effectively the company is using the resources over there, how, and further what is the ability of the company so as to generate the profits, and further how particular informed decisions have been made, right? So these particular things are the differences main related to profit and profitability, right? Now let's understand the traditional measures of profitability first of all. So if we look for the traditional measures of the profitability, we are having the two measures. One is related to return on assets, and the other one is related to the return on equity. So first of all, we are going to consider the return on assets. Now return on assets will be considering, but let's say the case that I'm having the total assets of 2 lakh rupees, and using these particular assets I'm generating a total revenue of, let's say, 8 lakh rupees over there. So what will be our return on assets? It will be equal to total profit, that is 8 divided by 2, that is equal to 400%. That is equal to 400% over there, right? So it basically, ROA does what? That we basically measure a company's profitability in relation to the total assets that the company is having. It basically indicates that how effectively the company is utilizing its assets over there so as to generate the profits. So determined by the amount of income that is earned over the net interest income, or as a fee on the services over there. So we can be looking for NII, that is the net interest income. We can be looking for the net interest rate spread over there, or we can be looking for net interest margin over there. So first of all, concept related to the, in case of ROA, it's the NII, that is the net interest income. Now what is net interest income? That the difference between the interest income earned and for the interest expenses paid on interest bearing liabilities, right? Let's take the case of bank over there. So bank has actually accepted the deposits, and bank is paying an interest of 6% on these deposits, and bank has particularly lent this money to the borrowers, and further is charging 12% for the same. So net interest income in this scenario is 6%. So what's the cost? The cost is 12% and income is 6%. So it's the difference between the same, and it's related to net interest income, right? So it can also be rewritten as what? That interest earned on securities. So whatsoever the interest that you have earned on your assets or the loans over there, and whatsoever the interest that you have been paying on the deposits or the borrowings over there, that will be give you what? That will be give you net interest income, right? Further, the second one, it's related to net interest spread. It's related to the net interest spread. Now, when we are talking about the net interest spread, we are talking about the averages of the same. So we are talking about the average interest that is actually being received on the assets, and further on the expense side also we are looking for the averages, that is average interest rate paid on the liabilities over there, right? So that's actually the interest rate spread. Now in case of NII, we are just looking for the interest rate total paid and for the received, but in case of the interest rate spread, we are looking for average, that what average interest rate has been received on the assets and what average interest rate has been paid on the liabilities over there, right? And further, the third one concept related to the return on assets, it's related to net interest margin. Now, when we are talking about the net interest margin, we are actually interested about calculating NII, that what is the net interest income over the total assets that we have been generating. Net interest income that we have been generated over the total assets over there. So NII is actually absolute value. NII, that is net interest income, is an absolute value, right? So total interest paid, let's say the case that was 350 and total earning was 650. So what will be NII, net interest income? It will be equal to 650 minus 350, that is equal to 300 over there, right? And further, the total assets, let's say those were 1000. The total assets were 1000. So in that scenario, what will be NIM, net interest margin? It will be equal to 300 divided by 1000. That is equal to 30% over here. That is equal to 30% over here, right? After that, it's related to return on assets for the banks. Now, return on assets for the bank would be equal to what? What is your net income that you have earned? Whether you have earned the fee-based income or the net interest income minus whatsoever the operating cost, that will basically constituting what? That will be your net income, right? So net income is what? This is your fee-based income plus net interest income, that is NII over there, and whatsoever the operating cost related to operating that particular business, that is your net income over there. And how we can be calculating the average total assets? The average total assets will be equal to total assets at the beginning of the year plus total assets at the end of the year divided by 2. That will be your average total assets, and this is how we can be calculating the return on assets for the banks, right? So let's have a look at the question over here. It says company ABC reported fee income of rupees 10 lakh. So fee income is of rupees 10 lakh plus interest earned is 20 lakh, and for the interest paid is 15 lakh. So this is your net interest income, right? That is 20 minus 15 over there. Operating expenses were 5 lakh over there. So this is your net income. So this is your net income. How come? Because it was fee based income, and for the net interest income, that is net interest received minus paid, and this is your NII, this is your fee based income, and further this is your operating expense, right? So here we can easily be calculating the net income. So it will be equal to 10 plus 5, that is equal to 15, minus 5, that is equal to 10 again. That is equal to 10 again, right? And further, the total assets at the starting of the year, those are given to be amount rupees 3 crore, right? So we are having the total assets of 3 crore in the beginning of the year, and at the end of the fiscal year, we are having the total assets equal to 2. So what it will be equal to average total assets? The total assets will be equal to 3 plus 2 divided by 5, 2 over there. That is equal to 2.5 CR. That is equal to 2.5 CR. So it will be equal to 10 lakh. That is 10 lakh divided by 2.5 CR. That is 2 lakh, 2 crore 50 lakhs over there. 2 crores and 50 lakhs over there. So it will be 1 divided by 25. That is equal to 4%. So it will be equal to 4%. So return on assets is what? Return on assets in this scenario is 4%. I hope that you must have understood the same. Okay. Now after that, it's related to the return on equity. That is the second frame. Return on equity is actually what? It indicates the profitability of the company in relation to the shareholders' equity. Now, what do you mean by shareholders' equity? That whatsoever the amount that the shareholders have invested, let's say case that you basically particularly rolled out a IPO, or your company has issued the shares to the investors. Now, shares have particularly invested the money, and further there is a capital, that is a shareholder equity fund capital, that is particularly acclaimed over there, right? Now, what is the return that the company is generating based upon these particular equity shares over there, right? So what is the return we are generating? Let's say case of we are generating the return of 5 crore and our equity is amounting 15 crore. So our particular return on equity would be equal to what? It will be equal to 5 divided by 15. That is equal to what? That is equal to almost 33% over there. Whatsoever the percentage we will be calculating over there, right? So that's ROE. That's ROE. So ROE, the main benefit related to using ROE is what? That basically considers both the return on assets. It considers the return on assets as well as the total value of the bank's assets, as well as the total bank's asset value over there that are generating the income for the bank. That are generating the income for the bank. So ROE is actually equal to what? It is equal to net income, as we have calculated above. divided by the bank capital, right? So in this scenario, let's have a look at the question over there. It says that company ABC reported fee income to be 10 lakh. So fee based income. So we are provided with the fee income to be of 10 lakh, and interest earned is of 20, interest paid, so net income is 15, right? That is particular this. Operating expenses is, so this is your net income, not fixed income, fee income. This is your net income that we have calculated. That is particularly equal to 10 lakhs over there. And further, we are having the bank capital amounting 50 lakh. So return on equity will be what? Return on equity, ROE, will be equal to net income, that is 10 divided by 50, that is equal to 20%. That is equal to 20%, right? So this is how easily we can be calculating the return on assets or return on equity. I hope that you must have understood. Okay. Now after that, it's related to branch operating efficiency. Branch operating efficiency, that how efficiently we are running a branch. Let's say the case that total expenses related to branch are 10 lakh rupees, and that is generating a particular, let's say, profitability of 20 lakh rupees over there. We can easily be saying that what is the profitability of the branch over there. So also we want to check the profit, we want to check the operating efficiency of the branch over there, right? That how efficiently the branch is utilizing its revenues, how effectively they are using its resources so as to generate the revenues over there, how they are controlling the cost, and how they are delivering the services to the customers, right? And further after that, it's related to strategies for improving efficiencies, how the efficiency can be improved. If there is business realignment, what do you mean by business realignment? That we must be understanding the processes, whatsoever the structure is there. We must be offering such kind of things to the customers so that we can increasing the efficiency and effectiveness of the same. That is business realignment. That is, we are realigning each and everything to the processes and procedures, right? And the second one, it's related to the business channel optimization. Channel optimization. Now channel optimization is, what do you mean by touch point? Let's say case that I'm going to the bank ATM, I'm basically using the application, how the interface is there, how I'm going to interact with the services over there. I want to basically improve the user interface, or particularly we can say user navigations over there, right? And also the third one, it's related to the process cost over there. Now definitely if we will be automating the things, it will be reducing the cost, right? So whatsoever the different processes are there, we must be looking forward so as to reduce the cost. Now what is actually profit? Now let's say case if I'm having the total revenues of 20 and the particular cost of 10, my profit is 10. Now what if I'm basically keeping my profits, revenues all same, but reducing my cost over there? My profitability is increased, my profit is increased over there, right? Now this is a scenario that this is the same logic that we'll be using, because we are to reduce the process cost over there. Further, we must be looking for staff productivity. We must be increasing the staff productivity. So whatsoever the training to them is to be departed, or we can be increasing or improving their communication or collaborations, right? That is to be done. And further, technology and automation. So much and more the technology is being used, much more beneficial you will be, right? And also you can be going for the vendor management, that we must be looking for the different vendors so that we can be having the service level agreement, so that we can be negotiating with the same, we can be having the support level from the same, right? That will be also be helping us so as to improving the efficiency. And the sixth one, it's related to product bundling and relationship pricing. Now what do you mean by product bundling? That basically it relates to cross selling, that how cross sell, how much better cross sell we do, right? And how loyal the customer is to us. So we must be targeting the relationship. So let's say case if I'm particularly a customer of a branch for a very long term, we must be providing some extra benefit or some extra perk to the person over there, right? That's related to product bundling and relationship pricing over there. It will definitely enhance the customer quality, and further it will also be if increasing the customer acquisitions. Okay. And for the sophisticated customer segmentation, so if you're having particular segmentation related to customers, you can be segmenting them so that you can be providing them a particular behavior, you can be providing them particular products or customized services or tailored products over there, right? And for the real-time cross-selling, now if you're having the data access to the system over there, you can be using the different techniques like data science or data analytics over there, so as to look for the different patterns and the customer insights over there, so that you can cross-sell better, right? For the innovative reward design, like particularly the profitable customers enjoy the premium benefits. Now let's say case if you are having a customer and your that particular segment is quite profitable, they must be having some benefits related to the same, so that they are indulged into using those services, right? Further, it's related to the automating the customer care. So now we must be implementing like HDFC Bank has launched the EVA, or other banks have also basically launched the chatbots over there, so that self-service options are available, AI powered customer care is available now, right? We can be using such particular things so that we can be reducing our overall cost, and also it will be enhancing the customer experience level, right? And further we can be using the big data. Now big data is actually related to data mining and data analytical technique, where we can be using the large form of structured and unstructured data, and further can be keeping the patterns outside from it, and further can be generating the different insights from the same, right? That's actually can be used. So these are the different things which can be used so as to increase the efficiency, right? And for the factors which are affecting the profitability of banks in India, let's have a look at it. First factor, it's related to macroeconomic factor. Now if GDP is growing, definitely the branches will also grow, because there will be increased demand of loans and credit over there, so definitely your system will also grow, right? The second one, it's related to inflation. Now inflation is having a negative impact on the profitability, because even if your profitability increases, your production or operational cost also increases. So basically it's having a negative impact, right? Now if we look for the industry specific factors, now let's say case in some particular industry the NPA levels are high. Now in that scenario the profitability will be low, and for the credit quality also. Now if the credit quality is degrading, that will also increase to what? That will also lead to increase in provisioning, because for each bad loan or for each non-performing asset we are to maintain the provisions, and that will be basically reducing the profitability, right? And there are some other bank specific factors also. It may be the case that your deposit cost is higher, and for the higher deposit levels positively impact the profitability, because much more funds are available, right? So if a bank is having much more deposit, let's say case RRB is having deposits available at its disposal amounting rupees 1000 crore, what does it indicate? It indicates that RRB can be lending up to rupees 1000 crore over there, right? So much more is a deposit with you, and further you can be lending more, and further can be earning more, right? And for the non-interest income, now definitely profitability these are day basically the major chunk comes from the fee based income also, like the banks are giving local facility, banks are selling insurance, banks are selling mutual funds. So that's actually the thing related to it. And further it's related to competition. Now stiff competition is there, and due to the competition only the lower interest rates are there, and their pressure is actually on the interest margin now, and the profitability has reduced in that particular concern, right? And it's related to regulatory environment. Now regulations which are being imposed by the Reserve Bank of India, let's say case that the banks are to maintain the CRR, that is the cash reserve ratio, the banks are to maintain the SLR, capital or the reserve requirements are to be maintained. Let's say case CRAR is to be maintained. Now what is CRAR? CRAR is capital risk weight asset ratio. Now as per the Basel III guidelines, the capital risk weight asset ratio is to be maintained, right? Now in that scenario, as per the risk weight of your assets, the capital is to be maintained, and you'll be having low level of funds available for lending, and ultimately the profitability will reduce, right? So the different regulatory environment will be leading to either increase or decrease in the profitability, right? And further it's related to essential factors to make continuous improvement in profitability. What factors can be there? Like we must be locating the areas for business where the business can be improved, right? We must be looking for the same areas. Now if you have basically looking for those areas where you can be improving the thing, definitely your customer service will increase, and ultimately the profitability will increase. And we must be using the KPIs. Now KPIs are actually the key performance indicators. Now the KPI is actually related to like key persons are also there. Now key person means that without this person our work will get affected. Now we must also be looking for those processes without which our work will be affected. Now if we basically analyze those particular indicators over there, particular performance indicators over there, we can actually be looking at the fact what are our strengths and what are our weaknesses over there, right? And further it's related to assessing your general business cost. What is our overhead cost? What is the discounted deal to the loyal customers over there, and what's the profit over there, and how it affects our profit? So we must be looking for the same, because these are the factors we must be looking into while providing a deal to some customer, so that we can look at that whether we are profitable when we are providing discounting deal to the customer over there or not, right? And also we must be reviewing the areas of business waste and reducing them. So let's say wastage of supply cost or something, power supply cost, that is to be reduced over there, right? So we must be looking for the same. And for the regularly reviewing the pricing of the product. It's not the case once you have done the pricing and it's done. Your pricing must be dynamic, and further it must be competitive also, it must be value for customer also, and must be covering the costs also, right? And for the testing of the prices on any of the products, basically review is actually required, that must be done. And further, we must be improving the profitability through best customers, like we can do go for the upselling, cross-selling, and diversifying techniques over there. Upselling means what? Your customer is already using a product, you want to basically sell them more in the same category, or you can be selling them from some different category, that is a cross-selling over there. And further, we must be having the long-term deals with the suppliers so that we can negotiate at a better price. And further, we must be researching for the new opportunities in the business sector over there, that how we can be expanding our market, right? And further, we must be monitoring system and processes in place, we must be benchmarking that what are the standards which are to be maintained over there, and that will also help you so as to overall reduce your cost, or so as to manage your cost over there, right? So this is actually related to basic factors which must be looked into continuously for the improvement of profitability. It's a general thing over there, right? So that will be all related to this particular video. I hope that you must have enjoyed the content of this video. So do rate this video out of 10 right now, and further do join our website right now. Do sign up on the website jaiib.learningsessions.in, and simply on sign up, or you will be getting the access to free PDFs. So do join right now, sign up over there and get access to all the PDFs free of cost, and further start preparing for the same. So that will be related to this video. Thank you so much, and see you again in the next video.